gold has been looking beautiful lately, guys. Obviously, we're reacting to this here today. Markets are down on the gold market, down 2%. Matt, what's your take here? What's your read on gold?
Gold started selling off right when we started getting the information on exactly what was going to happen on that Senate vote, runoff vote from yesterday. Market started responding bullish, and gold started responding bearish, and this happens on gold, and I am slightly concerned in the short-term price action. We'll talk about it here in a second, but this does happen on gold, on big up days in the market where you have a risk-on environment. Okay. Risk on environment, you're going to see a short-term profit taking in gold. Happens all the time. The question, and again, one of the reasons why we love gold is not just inflation, it is a risk off type investment as well. You cover yourself against economic calamity, and so when there's a risk on environment, it's a wash off on gold for in the short term. Now, the question a lot of people have on gold is, are we seeing a repeat of what happened in during the election of during the presidential election, where gold broke out of that 50-day moving average, snapped back, came right back down as the market started going bullish? We are seeing that a little bit, but there's a couple key differences here. Number one, you have a fairly substantial inflationary argument under a unified government with Democratic leadership. There is a fairly substantial inflationary argument, especially where that money is going to be going, in much more into consumers' hands than into corporate hands, which in my opinion does create a fairly substantially higher inflationary rate or inflationary environment than, say, under a divided government scenario where you would not see the path of fiscal stimulus as aggressive as you're probably going to see. So you do have that argument on the backdrop. I'm looking at this and I'm saying, okay, risk on environment in the stock market, snap retracement in gold. But unlike what happened in November, gold had a much better technical scenario coming into this breakout than we saw in November. And so unlike November, where you had that snapback where it just violated the very reason why you wanted to get into it in the first place, i.e. that breakout of that, trend line coming down, which also coincided right there with the 50-day moving average. This one had a much better constructive trend, constructive pattern coming into that breakout of 1900, and then on that snapback rally, because you had a good trend going into it, where is it coming into? It's coming right smack dab into the breakout channel where we're testing major support. And so I do believe in the gold argument under a democratic government. 100% I believe in the gold argument. I do believe this is a little bit of an overreaction to a risk on day in the market. Let's see how 1900 handles in the short term, but in the long term, this environment, when we're going to be talking in a year from now, guys, we're not going to be talking in a year from now at a $7 trillion balance sheet. We're going to be talking in a year from now at a $10 trillion balance sheet. In a year from now, the U.S. debt burden in America, what is that right now? What is the U.S. debt burden in America right now?
Oh no.
Total debt.
All right,
it is $27.7 trillion, guys. $27.7 trillion. Just a couple of years ago, we passed 20 trillion.
I still remember the conversation.
We're going to be talking about a U.S. debt environment that it approaches $32 trillion next year. And so, yeah, I do believe the long-term argument for gold ownership is very strong. If not, I'm not sure there's been a better argument for gold ownership long-term than there is right now.